Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Friday, September 9th. The euro is still higher today following yesterday's ECB meeting. The dollar recovered though after the Fed announced that Governor Brainard, one of the more dovish members of the FOMC, would speak on Monday. Note that Monday is the last day that FOMC members are allowed to speak before the so-called blackout period begins. They're not allowed to make public speeches during the week before an FOMC meeting. People are wondering if the Fed scheduled this speech purposely as its last chance to warn investors that a rate hike is likely at the next meeting. On the other hand, sterling weakened after UK Chancellor Hammond yesterday said Britain's getting close to its limit on borrowing. That implies that there won't be a major fiscal stimulus to offset the Brexit shock, and monetary policy will have to take up the slack. Oil soared as inventories plunged, but the huge drop in inventories, the second biggest ever, was because of a tropical storm in the Gulf of Mexico, which disrupted imports and offshore production. It wasn't due to any sudden surge in demand, so I think oil prices will fall back. As for today, we have the last of this week's meetings. The Eurozone finance ministers and central bankers meet today. They'll be joined tomorrow by their non-Eurozone EU colleagues. The group will discuss setting up a fund to help the Eurozone in case of a financial shock. The idea is to provide some sort of EU-wide fiscal policy to complement or even replace the ECB's monetary actions. Now, if the group does come up with some concrete ideas, it could take pressure off the ECB to ease further. And as we saw yesterday, that possibility can push the euro higher. But given the way that the euro area usually works, I don't expect them to make much progress at this meeting. In that case, the meeting may not impact the euro that much. The first economic indicator out today is the UK trade data. The indications from various surveys is that the collapse in sterling following the Brexit vote has been good for exports, and one assumes, therefore, negative for imports. The market is therefore forecasting that the deficit will narrow, which could be supportive for the pound. Nevertheless, when you look at the figures, the month-on-month change that's being forecast is really pretty small. It's well within the range of recent movements. Probably any improvement in orders hasn't yet translated into an improvement in actual exports, since there's a time lag between receiving an order and shipping the product. Nevertheless, investors could smell the beginning of a trend, which would be positive for the currency. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.